as the dollar wobbled ahead of U.S. non-farm payroll data, and oil prices gained for a fourth day after deep production cuts pledged by OPEC Plus members. MSCI's broadest index of Asian Pacific shares outside Japan rose 0.7%, marking its third straight day of gains after staggering 13% drop in September. Hong Kong and Seng index also trimmed earlier losses to be up 0.2% on the day, while Mainland Chinese markets remained closed for holidays. The S&P 500 futures rose 0.5%, Nasdaq futures increased 0.7%, building on a late rebound in U.S. stocks, which helped limit earlier losses in currency markets. The U.S. dollar eased 0.3% against a basket of major currencies after climbing 0.7% overnight on hawkish comments from Fed officials. Europe is set to face an even more acute energy crunch next year after draining its natural gas tanks to get through the cold of this winter, as the EU looks for ways to ease the crisis. European countries have filled storage tanks, to around 90% of their capacity after Russia cut gas supplies in response to Western sanctions imposed over its invasion of Ukraine. Gas prices, which surged in the months after the invasion in February, have retreated, but that could be short-lived as countries compete to buy liquefied natural gas and other alternatives to Russian pipeline deliveries. To help tackle the pain, the European Union is considering a gas price cap, an issue that has divided the 27-nation bloc, as some countries worry it could make securing supplies harder. Global oil supply is set to tighten, intensifying concerns over soaring inflation after OPEC Plus group of nations announced its largest supply cut since 2020, ahead of European Union embargoes on Russian energy. The move has widened the diplomatic rift between Saudi-backed bloc and Western nations, which worry high energy prices will hurt the fragile global economy and hinder efforts to deprive Moscow of oil revenue following Russia's invasion of Ukraine. Global crude futures jumped this week, returning to 3 weeks high after the Organization of Petroleum Exporting Countries and their allies, including Russia, on Wednesday agreed to slash output by 2 million barrels per day, just ahead of peak winter season. This development is likely to drive spot prices higher, particularly for Middle East oil, which meets about two-thirds of Asian demand, adding to inflation concerns as governments in Japan and India fight rising cost of living, while Europe is expected to burn more oil to replace Russian gas this winter. Oil prices on international markets stabilized near 3 weeks high today after OPEC Plus agreed to further tighten global crude supply with a deal to slash promote production by about 2 million barrels per day, the largest reduction since 2020. U.S. West Texas Intermediate crude recorded a downward price margin of 0.13% to sell at $87.65 per barrel. Brent crude futures sells for $93.26 per barrel with a price decline of 0.12%. Bonnie Light maintains its uptick review of 1.6%, selling at $94.85 per barrel. For the OPEC basket, crude oil dealers offer $94.05 per barrel with an upward price margin of 2.08%.